Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing how to guard your financial assets against the coronavirus outbreak. The ink is still dry on the United States and China Phase 1 trade deal agreement, and already China's commitment to purchase goods has been very unexpectedly hampered by the coronavirus outbreak. With 56 million under lockdown in China because isolation and quarantine is the best way to prevent the spread of a deadly virus, it poses difficulties for China to import and export goods, so long as their country is in a stranglehold situation. Similar to the SARS virus, which also started in China and lasted from November 2002 to July 2003, it caused 800 deaths while reaching over 30 countries. The coronavirus is an unknown entity in terms of potential mortality rate, and therefore nobody knows how long this new contagion will continue to grow and accelerate in China. It could possibly cause a pandemic across the world. At this stage, it is difficult to say how it will impact on global economies in the medium term. Certainly, the longer it goes on, the more of an impact it will have on the gross domestic product of China and all of the other countries that it does business with. It is important to say at this point that our thoughts and prayers here at Forex Academy go out to all of those people who are affected by the virus. And the thought of trying to take advantage of this terrible situation and make money when people are suffering and dying is absolutely crass. However, those of you who are currently in trades that could be affected by this outbreak have a right to know how to protect yourself while this awful situation continues. As mentioned earlier, this will likely affect gross domestic product of the countries who do business with China and of course China itself. Therefore, we might expect to see that stocks and indices across the globe may come under continued selling pressure. Recent record highs of some are already well off their highs. And those countries which are heavily reliant on exporting goods and services to China will also be affected by their currency rates falling. This is not the case in all cases. So let's take a look at what might happen the longer this goes on. This is considered to be a risk-off event where investors will diversify from risky assets and move to A-rated bonds and treasures, as well as gold, cash and other safe haven assets. For example, Australia and New Zealand, whose GDP is heavily dependent on the exports into China, may find that their currencies come under selling pressure, while countries such as Japan and Switzerland find their currency grow stronger due to their safe haven status. Although Bitcoin is off its recent highs and is considered to be in a slight downward channel at the moment, investors may be sitting on the sidelines waiting for opportunities to buy this asset. With the United Kingdom due to leave the European Union this week, we might see the pound find volatile ground due to uncertainty pertaining to the pressures of completing a trade deal within the next 10 months with the European Union, or face the possibility of crashing out of the euro with no deal after the transition period ends in December 2020. The coronavirus situation could cause pressure on the pound as the market looks at the overall risk sentiment. The euro has also come under selling pressure recently, mostly due to the economic data and a dovish stance taken by Miss Christine Lagarde. She is the president of the European Central Bank, and her recent comments have put the euro on the back foot. All of this can only mean one thing for the US dollar. Its directional bias will be to the upside. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.